Hello friend, welcome back to my channel, and today in this video I am going to discuss about the what is Banca insurance. Let me explain about the insurance, Banca insurance. So Banca insurance is an agreement between a bank and an insurance company, allowing the insurance company to sell its products to a bank client base. So this partnership arrangement can be profitable for both companies. Bank earn the additional revenue by selling insurance product, and insurance companies expand their customer base without increasing their sales force. So if we are give some takeaways, so bank insurance, as I told you, is an arrangement between a bank and an insurance company through which the insurers can sell its products to the bank's customers. So the insurance company benefit for increased sales and border clients best without having to expand its sales force. So the bank benefit by receiving additional revenue from the sales of insurance products. So let me understand about the banca insurance. Briefly explain. So as you can see that banca insurance arrangement and common is in Europe, whereas the practice has a long history, and we European banks, so such as Credit Agricole, France, ABN AMRO, and Netherlands, BNP Paribas France, and ING Netherlands, so dominated the global banca insurance market. So but the best part of this is the pictures varies widely from the country to country. A 2019 report found that while banca insurance accounted for 83.6% of life insurance sales in Italy, and 66.2% in Spain, and 64.2% in France, and 62.6% in Australia, and its market shares was lower in Eastern Europe, and non-existence in the United Kingdoms and Ireland. So the United States has been slower than many nations to embrace the concept, in part. So that's because the questions of whether banks in the US should be allowed to sell insurance was a matter of continuous debate for many years. So among the issue, unfair competitions for insurance agent, possibly risks to the banking sectors, and the potential for banks to pressure customers into buying insurance in order to qualifying for a loan. So, advocate meanwhile maintained that both banks and insurance companies would profit from the arrangement. So that is that should be also a convenience for consumers, and that be able added competitions might lead to lower insurance price. So the Bank Holding Company Act of 1956 effectively prohibited many large nations banks from selling insurance products. So, however, whether a bank should sell insurance depended largely on the type of bank and which agency or कितना or agencies regulated it, as the U.S. General Accounting Office noted in an 1990s report. এখন দিতে পারতে না, তখন দিলে তো থাকতো না টাকা, ওখানে তো পুরো মাস রয়েছে না, টাকা নাই না। By the late 1980s, so many state allows state chartered become banks to sell most type of insurance, and in town with a population less than 6,000 banks holding companies, national banks and some state banks can sell all type of insurance. So in 1999, the federal Graham Lands Bill Act eliminated the most of the remaining restrictions on U.S. banks selling insurance product while continuing to allow the state to regulate other aspects of insurance. So, banker insurance industry growth. The banker insurance market is growing worldwide, particularly for life insurance and especially in the Asia Pacific region. So, the research and consulting firm IMARC Group says the global banca insurance market reached a value of $1.268 trillion in 2021. So I mark expect the market to continue to grow at a compound annual growth rate CAGR. Compound annual growth rate of 5.9% and attain a value of 1.802 trillion dollars by 2027. A major factors driving the trend a growing genetic populations with greater needs for health and life insurance as well as retirement plan. So the advantage and disadvantage of banca insurance. Let me explain in this video. So from a consumer point of view, banca insurance offers both advantage and disadvantage. On the plus side, buying insurance at the bank in the convenient that especially true in small town where insurance agents may be scarce, although less so now that insurance is widely available online. That conveniently may also encourage others Americans who need life insurance to buy some. So on the negative side, the ease of buying at the bank may discourage consumers for shopping around and getting a competitive price on their insurance. So there is also some questions as to how qualified bank employees are to advise customers on their insurance needs. So compare with insurance agents and brokers who specialize in the field. So for banks that becomes involved in bank insurance, so there appears to be a little downside. Expect the possible risks to their reputations, or if the insurance products their employees sell prove inadequate or unsuitable for the consumer. So when did banca insurance begin? Banca insurance, as we know it today, appears to have begun in France in the 1970s. Thank you guys for watching my video. In the next video, till you end.